Hello and welcome to another update video on FET. Yeah, the FETCH.AI chart is now finally getting this more clearly defined B-wave pullback we wanted to see. At least it gives us some clarity because this ongoing sideways action up there just was not very clear. It just did not give us a lot of clarity and did not tell us whether the price is really already in the B wave or whether the A wave is still getting one more upside extension. Now, based on latest price action, it does look more and more as if this B wave is indeed unfolding. And then from this support region here, a C wave to the upside could start. We will talk about the micro support area in a minute, and I will tell you from where the bulls might attempt a restart of, or a start actually, of the next rally to the upside. Generally, it's just important to understand that as long as we're holding this 43.3 cent level, the overall focus could be on higher prices, and we just want to see some kind of a response to this support area here. We want to see a reaction to one of these Fibonacci levels and then a break above these last highs, specifically in the 83.5 cent region. If we break above this zone, these previous swing lows from the 3rd of June, 4th of June, and 11th of June, that could really trigger the next rally to the upside in wave C. That would be a first confirmation that we've started the C wave up. I'd say let's take a look at the smaller time frame for FET. It tells us a lot about the microstructures, and overall the wave count has not changed, but I think it makes sense to remove the alternative scenario. It was only the alternative anyway. I think it makes sense to remove this alternative wave A scenario. Doesn't feel right anymore with this pullback. It really does look like this is the real deal, the real B wave pullback. And again, we have a 5-wave move up into the Friday, the 23rd of May high, and then a corrective pullback, which is unfolding right now. I'm tracking this as a 3-wave move down in the A wave, a 3-wave move up in the B wave, and a potential 5-wave move down in the C wave. So this area between 59.7 cents and 48.6 cents is an ideal target zone, we could say, for the circle wave C here to the downside, which could then send the price into this blue zone, obviously this C wave, and this is where ideally this correction will complete. At least this is an ideal target zone, which was developed or measured based on the initial move to the downside, wave A, measured against the top of the B wave, and then we get these mathematical projections. Now, while the microstructure isn't very clear, which it rarely is in the crypto sector, I think what becomes quite clear is this might be some kind of a bear flag. Now, when you watch the video, we might have already moved because this is just analysis of the microstructures, but the microstructures are not so important here. All I want to share with you, this looks a little bit like a bearish flag. We could get one more low. At least, I would not be surprised by a little bit more downside and maybe a move down, another consolidation and another move down. It's this area which should really be the focus between 59.8 and 48.7 cents. There seems to be a bit of a cluster here in this area around 55, 56 cents, however. That's the update on FET. I hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Thank you very much. Bye-bye.